Alrighty, good morning everybody. It is Wednesday, October 18th, 2023. Let's go ahead and do what we do every morning here. We're going to do a review of what happened yesterday and first talk about what we had on our daily report here. So, coming up at the top, remember some potential bearish daily and official 4-hour bearish signals from yesterday's high. This is one of the key things we were seeing in terms of the if you were to summarize what we were seeing on the higher time frames. And then when we came down to our key insights and plans of action, we talked about as we come into Tuesday morning, it looks as if the bulls have lost their steam with price failing to break out and now being pushed below 50% of the previous day in this pre-market session. Also note we have a potential bearish signal from yesterday's high on the daily and an official bearish signal from yesterday's high on the 4-hour. If this is only a retracement for the bulls to recover from, because remember, we pulled back from all these bearish signals we had, we did pull back about 20 points. And that's why I told you, if this is only a retracement for the bulls to recover from, we'd expect to see price hold around a few key areas. 43.77 to 78, 43.74.75, 43.68.75, and approximately 43.63 to 65. All right. So if this was going to be a bearish pullback that was going to lead to a bullish bounce, we expected the bounce to happen right around one of these very discrete areas on the chart. Okay, if the bulls couldn't defend those areas, then it's most likely a push to retest last week's low with the previous daily low in the way. So being a bear if we couldn't defend these three general areas. So let's look and see what happened yesterday. And it was a pretty sexy morning. So let's go scroll on back to the open. And again, I couldn't have really been any sexier given the conditions of the market that we're in right now. Give me 1 second here. So let's go. Here's the 512 chart, looking at the iota of the market. What did we say? 68.75 and 43.63 to 65. Those are the two places we expected the bulls to hold. If we couldn't hold, we were expecting the bears to go ahead and push things lower. Well, 68.75, the first expected support level on our chart right at the open, literally held nearly to the tick. It bounced up and failed right off of our scaffolding level, came down, and then got the largest rotation of the day for the bulls, 3 ticks in front of 65, which was our next expected support area. Okay, that's the major previous week, 50% of the previous week there. I said 63 to 65. The market bounced at 65.75. I was off by 3 ticks. It did hold the first level with 1 or 2 ticks of a break there. So beautiful roadmap action yesterday, if you ask me. We had a pullback in the overnight session to come all the way down and bounce discreetly off our first expected support. Came up to our discrete area on the chart here for our scaffolding and failed nearly to the tick. And then bounced 3 ticks in front of our very, very critical level to see the bulls hold. And then from there popped up. Notice the pullbacks here off the 200. And then the bounce off the FMA. And then pulls back and then holds that very discrete support area to start to break out to the upside. So in my opinion, yesterday couldn't have worked out any better, right? So if you had 68.75 on your chart, if you had 63 to 65 on your chart, you should have been able to make some money here, seeing that that was exactly where the market held. And then if you did want to be a bear, noticing that we were coming out of this very, very, very strong sell-off in the overnight session, you could have shorted the back end of the scaffolding level here 10 minutes after the open, and got basically a 10-15 point sell-off right to our next target, which would have been the 50% of the previous week at 65, right? So you could have bought out of the open off our expected support. If you were a bear, you could have shorted off the back end of the scaffolding. Within the first 20-30 minutes of the open, you should have been able to make your money and be done for the day. If you weren't, and you started to notice that, hey, Justin's level he said was going to hold right here for the bullish case today, if you saw that level hold yesterday morning and you saw the bulls get through the 200, get up through the scaffolding, and get through the VWAP, Well, now you're starting to see, hey, look, this might be the beginning of a bigger rotation, even if I can't see what's going to happen next. The two levels we expected to hold did indeed hold, and that is one of those very typical low bounce, pull back a slightly lower low, and then the breakout to the upside. That is a pattern that I've taught you guys for, in these weekly webinars and in my training videos. So that right there is a very typical pattern. And then from there, you could have been a bull buying all these pullbacks, again, with such limited risk that it's just, you could have bought the back end of the 50 as we broke out. That would have brought you up over 10 points to the upside, right to our scaffolding, where the market then pulled back to the tick right off of it, right? You could have pulled the pullback to the VWAP for the long. You could have put the pullback to the 200, although it did bounce 2 ticks in front of it there, so wouldn't have gotten filled if you were waiting for it to get filled there. You could have even just bought the pullback to this level as we were testing into the 200 and caught the whole move. You could have shorted the back end of the scaffolding here and took your profit right at the 200 where we got the rotation back up and got yourself 6, 7, 8 points out of that. All right, so there's so many good opportunities yesterday. You could have just bought the pullbacks to the 200. Once you noticed, again, going back to what we said yesterday, if this is only a retracement for the bulls to recover from, we would expect to see price hold around a few key areas. And again, there's 68.75, there's 63 to 65, there's 68.75, there's 60.65, right? Held. There's the breakout. If you wanted to become a bull, given the very exact scenario I gave you on our report yesterday, you could have bought all these pullbacks to the 200 and rode the entire market up for 10, 20, 30, 40. I think it might have even been a 50-point push or more, right? So even if you caught it late at 43.91, you still got yourself 20, 30 points on the S&P, right? So that maybe you bought over here around this pullback as we were finally breaking out through a lot of our critical contention zones above, and you would have caught yourself 30, 40 points to the upside. So again, I don't know anywhere else in the world where you have opportunities of basically one tick on the S&P that turn into 50 to 100 point moves in some cases. And then interestingly enough, once the market got its breakout and it started to get this bullish push that we did talk about from that major low beforehand, then we came up, and interestingly enough, the high of the day was, for all intents and purposes, the next scaffolding. We came into it, pulled back, came into it, pulled back, came into it, pulled back. In many cases, nearly to the tick, right into it, resistance. Then they popped through. This looks like the day before, I think, as well. We had our major high for the day was the scaffolding, tested, broke through it by 4 or 5 points, came back, and then held it from the back end, nearly to the tick for the largest rotation of the day. Okay, so high of the day, you could have been long, taking profit around the scaffolding. You would have nailed basically the high of the day in your trade. And then from there, it got a little tricky because it looked like we were going to break out. And then right around the high of the day before, that red line, the whole thing failed, right? So if you were a bull all the way up to that point, you might have gotten washed out on the pullbacks trying to buy them because there was no steam for the bullish side of things and the market just dropped, right? Despite that, you had opportunities to short the back end of these levels if you did decide to become a bear once we failed back down below the scaffolding and then held it here one tick in front for this larger sell-off. There's the crossover of the two moving averages we talk about. There's the hold of a lower high and then the failure. So you could have sold the FMA, could have sold the Holy Orange Power Level and the 200 here multiple times, and then you could have sold again to the damn tick, the scaffolding level here. It touched it to the tick. Again, being a bear, noticing that everything was starting to sell off and we were getting down below the hope bowl, down below VWAP, could have been a bear and sold the scaffolding with 0 ticks of heat and got a sell-off right to our next daily power level, 43.84, which is 50% of the day before. You would have grabbed yourself a 15-point sell-off with 0 risk. Then notice, interestingly enough, what happens here. The market holds right around 50% of the day before. I'm telling you, these roadmap levels is literally the areas in the chart for the largest rotations of the day. The low of the day we predicted the high of the day we already had on the chart, right? And then this pretty big rotation at the end of the day, right off the 50%. Telling you guys, there's no better place in the world to, get levels that are going to have these type of reactions. And then again, the end of the day was a little bit of a choppy situation, right? Despite the choppiness, notice where a lot of these rotations occurred, right off the holy orange power level here, nearly to the tick. In so many instances, the parry right off the scaffolding, the parry right off the 50%. I mean, every major rotation on this chart inside of this chop was right off one of our levels. Nearly. I mean, yeah, it got super messy in here, right? But these turns, holy orange power level, 200 moving average, holding the top end of the VWAP when it's above it, holding down below the VWAP when it's below it. I mean, even inside the chop, you had opportunity. And then at the end of the day, you can see we kind of chopped up right up through the scaffolding there, and that was it. So that brings us into the overnight session coming into this morning. And as you can see, still playing right around 50% of the day before, right? It's been a pretty choppy situation, but let's look at the details here and then we'll get into our pre-market for this morning. So in the overnight session here, market sold off. There's your parry right off the VWAP and the Hopel. Well, Hopel wasn't on the chart at that moment. So right off the Hopel, or the VWAP. And then notice, again, inside of all this chop, where does the market hold? The back end of the VWAP, then pops up through and holds the top end of the VWAP, in many instances to the tick. And then the high of the overnight session up until that point, scaffolding level, comes back down, holds the Hopel, or the VWAP again for its rotation down, gets up through it, holds it for the bounce back up. I mean, all of these little rotations were basically highlighting the highs and the lows of these rotations with these levels. All right. And now as we get closer to the open here, notice what happened. We're continuing to kind of stair step lower. We've got this beautiful hold the back end of the scaffolding, hold the back end of the 50%, hold the back end of the VWAP. And interestingly enough, where did we bounce in the overnight session? The high of the overnight session, scaffolding level, the low of the overnight session, the next scaffolding level, to the freaking tick. If I had $1 for every time we hit these levels to the tick, I'd be a multi-millionaire at this point. And then from there, here we are coming into the open, and again, still holding our scaffolding level, which has been on the chart for multiple months now, or at least 2-3 weeks. Okay, so it blows me away every morning when I come back and I review this stuff. Just unbelievable opportunity. I don't think there's anything, like I said earlier, anything in the world that's any better than this. These levels we put on the chart weeks ago, and they're holding to the tick for rotations in the market inside of, by the way, inside of all of this freaking chop in here, all this sideways action. Despite it being choppy and sideways, it's still respecting these levels to the tick. So blows me away. Now that brings us into our pre-market for this morning. It was a long diatribe there, or what I like to say, my rotomontande. Let's jump up.